In this video, we will learn where should goes debit and where should goes credit. Different businesses have different type of activities, but the account are same for all type of businesses. According to accounting equation says if you wanna analyze your business condition, you must measure this equation. Assets is equals to liability plus owner's equity slash capital. So let's start. First, we know what's the purpose of debit and credit. The basic function of the debit and credit are maintaining the each account balances like this. I have created the journal ledger. Here, the all balances are showing me individually. Bank balance I have now 3,50,000. Bank 1 50,000 balance, it shows positive value, so it means it's I have available that amount. Customer shows nil balance, direct labor, electricity expenses. John is a supplier account, so John is a supplier account, means a liability account. Partner is a equity account. Petty cash, it's a current asset account I have available. In hand cash 1 lakh 30. Raw material, it's a current asset account I have available 1 lakh 50,000 from I purchased from XYZ. Sales, what I sales, it's a income account, so it goes on income statement. This is a credit balance, so here we go in system income. When credit balance increase, it will be credited. So for better understanding, we will move on the journal entries. Time saving, I have created all these entries. Now, first entry says cash injecting into business bank, it's a asset account, so it will be debited. Partners, partner, it's a equity account, it will be credited. Move on the second entry. Here, raw material purchased from XYZ. XYZ means I have purchased this raw material on credit base. So raw material, it's a asset, so asset always be debited when they increase. On the other account, I purchased this from John is a liability account. I because I purchased on credit basis, so I when the liability increase, it will be credited. Now third entry shows me that cash withdraw from bank for expenses. Petty cash debit, it's a asset account, current asset account, but on the other hand I have the when the asset decrease, it will be credited. When asset increase, it will be debited. When asset decrease, it will be credited. Now now the foreign tree shows me sell finished goods to customer on credit. Now first I have purchased the raw material on credit. Now I have sell the finished goods to customer on credit. So here I have debited the raw material. On the other hand, here I have debited the customer's account and sales account. It's a income account, and income account always be credited when they are increasing. Here it means the sale or income account, so income account always be credited when they increase in free payment received from customer. First I have sell this on credit. Now he will paying us for the goods. Payment received from customer. Bank is a asset account, so it will be debited. Customer is also an a current asset account. When the asset account decrease, it will be credited. On the other hand, entry, I have paid the wages to someone for that work from my petty cash. Wages account, it's a expense account, and expense account, when it increase, it will be debited. On the other hand, current asset account, petty cash, it's a petty cash, it's a current asset account. When it decreasing, it will be credited. Now the other entry shows me paid to Peter for direct labor. Direct labor, it's a expense account. When expense account increasing, it will be debited. On the other account, the I have paid from this direct labor cost from petty cash. Petty cash, it's a asset account, current asset account, so it will be decreasing. When the current asset account decreasing, it will be credited. Now the 8 entry shows me paid to Johan. John is a liability account. I paid against that the I purchased from raw material. So raw material I have purchases from John. John is a liability account. I'm paying to that. So it will, I'm paying from cash, CPV, cash payment, voucher. John is a debited, and the debited, when the liability account increasing, it will be credited. And here is the John balance. Debit, paid to John. Debit, raw material purchased from John, credited. Now the balance is nil. Now the ninth entry, I have paid electricity bill from petty cash. Electricity is, it's a expense account. When expense account increasing, it will be debited, and asset credited. When they decrease, it will be credited. Now the 10th entry, advance payment received from customer. So bank debit, asset account I have debited, and on the other account, customer, it's also a current asset account. When the current asset account decreasing, it will be credited. Now the 11th entry shows me amount transfer into an other bank. To them, it's a contra entry to bank another bank. So one bank debited and previous bank credited. Now the 12th entry, finished goods sale to customer. I have received from the customer 50,000. Now I am selling to him. Customer debited. Here is the credited. Now there is debited. 50,000 debit. And sales, when sales, it's a income account. And income account, when income account increase, it will be credited. Now the 13th entry I have posted here, tools purchased for machinery. Spares and tools, it's a asset account. Spares and tools, it's a long term assets, so it will be debited. When the asset account increase, it will be debited. On the other account, when the asset account decrease, it will be credited. Thanks for watching this video.